Social Security benefits are still subject to taxation, in spite of what you may have heard. I know it's a little confusing. There's this new big tax law that was passed, and it was originally in there that it would remove taxes from Social Security benefits. But that clause was removed, and so the tax calculation is very much still intact. And everyone that files their tax returns, they have to include the formula to calculate the taxes on your Social Security benefits. What's different is that there is a new deduction to help offset those taxes. So let me explain. Now, if you look at my screen, this is the provisional income formula, which is used to determine how much of your Social Security benefits will be taxed. The taxable bucket, that just is going to be any type of income that is taxable in the current year. It could be earned income, it could be rental income, it could be interest income, it could be tax-free, or tax-exempt interest, such as interest on muni bonds. Even though it's federally tax-free, it gets added back in to this formula. Okay, so you take that number, and then you add it to any distributions from retirement accounts. So the tax-deferred bucket, those are retirement accounts, right? It's your IRAs, it's your 401ks, TSPs, etc., or pensions, all tax-deferred. So when you take money out in retirement, that is considered ordinary income for tax purposes. Okay, so you take that number, you add it to the taxable, and then you take your annual Social Security benefit for the full year, and if you're married, it'd be your combined total annual Social Security benefit. Then you take 50% of that number, you add it to these other numbers, and that equals your provisional income number. Okay, so the provisional income number is what is going to determine how much of your Social Security benefits will be subject to taxation. Okay, so if you look at my chart here, if you're single and that provisional income number exceeds $25,000, 50% of your benefits are subject to taxation. If it's over $34,000, and it's 85% is subject to taxes. Married couple, it's $32,000 and $44,000. So this has not changed. This is still very much intact. So you might ask, well, doesn't the new deduction just erase all of that? And the answer is maybe, depending on your age, depending on your situation, depending on your income level. So if you're 62, 63, 64, those years, that deduction does not come into play at all. And so you're paying taxes if you have your Social Security started in those years. Now, in the year that you turn 65, there is an added deduction, $6,000. So this is how that works, right? If you're single, you get the standard deduction at all ages. At 65, there's an additional $2,000 plus an additional $6,000 for a total deduction of $23,750. And then when you're married, it's $31,500. You get an extra $3,200 at age 65 or older, plus the new $12,000 for a married couple. So you both have to be over 65 in order to get the full $12,000. So it will reduce taxes, certainly, but the Social Security tax calculation still has to take place. And depending on your income level, you can be phased out of this deduction, or you may not get the full deduction. So if your income is under $150,000 as a married couple, you'll get the full thing. If it's over $150,000, you'll start to be phased out. Now, a total deduction of $46,700 is pretty significant. So there's definitely some tax savings there. But I guess the key thing to keep in mind here is that these additional deductions for seniors, age 65 and older, is only temporary, right? It expires after 4 years. So, let's say you're, 63 right now. 2 of those years are going to be used up where don't get the deduction. Then you would have 2 years where you got that deduction, and then it's set to automatically sunset. Now, could Congress change the law and make those permanent? Congress could do anything, right? So they could, there's a saying, the tax code is written in pencil, because it's only going to be there until they change it again. But if nothing happens, that extra deduction will go away after 4 years. So it still creates some unpredictability of not knowing for sure how much of your money in Social Security you'll have throughout your retirement years. Now, take a look at this chart. In these scenarios, we're using the same sample data, and the only difference between them is planning strategies, okay? So in the first scenario, this is assuming someone they collect Social Security at their full retirement age with a balanced portfolio. They only have a 58% chance of success that their money will last throughout retirement. That means there's a 42% chance that it won't. In the second scenario, you can see that it's greatly improved up to a 77% success rate. And that is where it's just Social Security optimization strategies have been employed. A significant difference in the total outcome. But still, 77% is not that great, right? And then you get to this third scenario, and again, same sample client data in each of these scenarios. The third one getting all the way to a 93% success rate. Now that's going to feel a whole lot better. That's a combination of Social Security strategies, portfolio design, and tax strategies, proactive tax strategies. The planning makes that big of a difference between kind of taking a traditional approach versus a comprehensive, holistic plan. It actually ends up in increasing your chances of success because there's efficiencies. There's essentially more retirement income because of the planning decisions. If you go to the financialfastlane.com, and this is what our website looks like, you will see here we have some special offers. One here on the left is a Social Security analysis report. So what this is, and you may want to consider this is a professional Social Security analysis based on your data, based on your numbers. It's a $29 report that we've had hundreds of people say it's the best $29 they've ever spent because it will give you some really valuable information. And probably the best part of that report is you have an option to have any of your questions answered with an experienced financial planner here on my team. And so you get the report and you have someone help you understand that report. And so you might want to check that out. That's at thefinancialfastlane.com. You'll also see that we have an online course where we go into much more depth on retirement income planning. You can check that out. And you may be interested to schedule a free consultation just to talk about our financial blueprint process. You also see we have a high yield savings account option that if you want to open up an account for that. But if you scroll down the page even further, you'll see that there's a whole bunch of free resources, things that you can download. And so hope you'll check that out. I really hope you found some value in this, and I look forward to seeing you in the next episode of the Financial Fast Lane.